Today is Monday, September 12th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains this morning, Steve, why don't we start this morning looking at the managed funds positions and the current most significant technical signals?
Well, currently, the corn market made new highs last week for the move on concern about USDA today calling about a lower corn crop and worries about some of the Ukraine corn exports. We kind of backed off a little bit this morning before the report. From the high in May, funds sold 250,000 corn contracts. They've added about 80,000 contracts in the last 2 weeks. So we're a little overbought. The market still thinks that we are going lower into the harvest, but the cash is very strong as the farmer's not selling. Over in the beans, the fund sold almost 100,000 contracts from the May to the lows. They recently bought a few back, but they're still reluctant to buy the market because of the global recession and the impact that might have on China buying, and that South America still has beans, meal, and oil available to the marketplace below the U.S. The funds really aren't playing in the wheat market very much. They went from a long of 25,000 contracts to a short of 25,000 contracts. We've rallied in the wheat market because of the Black Sea situation and El Nino continued into Jan could dry out the U.S. southern plains. The beans are in a 1370 to 1440 range, and I doubt if we get out of that range.
Steve, you touched a little bit on the current fundamentals, but could you maybe expand on what are the key fundamentals that we're looking at in all three grains currently?
Well, I think number one is the recent rally in the dollar had kept U.S. exports uncompetitive. The recession globally, we mentioned a little bit about how buyers, especially North Africa, Middle East wheat buyers, China, because of the global recession, may not buy as much grain from the United States. And then I think the other thing happens to be the money flow. Money flow is just kind of sitting on the sideline right now, waiting for the Fed to take action on interest rates and whether that puts us into a recession.
Steve, here we are heading into harvest. What do we think about the weather, the rest of the year here and maybe even the longer term aspect into 2023? What are the experts saying?
Right now, when you look at the 30 and 60-day outlook for the U.S., it looks like perfect for harvest. It's going to be warm and dry. Most of the rain will stay across the extreme southern part of the U.S. and parts of the southeast. The big surprise last week was that La Nina information came out suggesting that it'll last until January. Now, if that's true, two things happen. Number one, South America could have another dry year in parts of Brazil and Argentina. But more importantly, it will stay dry in the U.S. southern plains and southwest, where we've seen record drought conditions and record high temperatures. So there is concern about getting the winter wheat crop planted for 2023. But as far as harvest goes in the U.S., it should be a quick harvest.
Thank you. Alan, looking at the financials, what are the estimates for the inflation reports this week?
Okay, first of all, we'll have the August Consumer Price Index coming out tomorrow. It's expected to be down 0.1%. And then on Wednesday, we'll have the August Producer Price Index, also expected to be down 0.1%. So I'm still of a mind to believe that we have seen peak inflation. I think not just peak inflation here in the U.S., but I think peak inflation globally as well.
So, Alan, how do you think the Fed will react to declines in inflation numbers if they actually come in as expected with these smaller declines?
So I think the Fed, in fact, they have basically said they need to see a period of weaker inflation numbers not just 1 or 2 months. So I think the Fed will be undeterred in their policy of being aggressive in raising rates. And it still looks like that will be the plan going following these reports into this year and probably in the first part of next year, where the Fed will be aggressive in hiking interest rates.
Seasonally speaking, Alan, we're in the weakest month of the year for stock index futures. Will the seasonals be accurate this year? What's your crystal ball say?
I think not this year. Of course, September, the weakest month of the year for the S&P and the Dow, but I don't think that'll be the case this time, even though the Fed will most likely raise by 75 basis points at the September 21st meeting. I think traders will be looking ahead to the possibility of subsequent meetings this year where the Fed may be a bit less aggressive. So I'm counter the seasonal. I think that September will be an up month across the board in the stock index futures.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.